Hi, everybody. This is Tony Nash with Complete Intelligence. Thanks for joining us for another Quick Hit. Today, we've got Albert Marco, and he's a politics and economics expert. Albert, thanks for joining us. I really appreciate it. Can you take some time and let us know a little bit about kind of what you do?
Well, Tony, specifically what I do is I'm a political economics, I don't want to say, well, consultant, really. I advise congressional members and some financial firms on how, the machinations of what DC does and how money flows from the Fed, Treasury, or Congress out to the real world.
Wow. Okay. Interesting. I want to dig into that a little bit. So, Albert, we've had some talks, and I'm really curious about your perspective with COVID coming and really the government kind of pulling the plug on local economies and in some ways the national economy. We've seen a lot of intervention in markets from the Fed and the Treasury. I'd really love to kind of hear what you've seen and kind of what your assessment is of that activity.
Well, first off, we have to understand that politics and economics are tied to the hip. You can't deviate from the two. I don't like when people try to disassociate the two. But from that, the Fed and the Treasury had to work on financial stability of the markets. That was first and foremost. That's the ground game right now. So from there, the only way to do such a thing would be to congregate all the market makers and select certain equities and pump those equities until the market had a perceived recovery at that point.
Okay, so perceived recovery, that's an interesting word. So tell me about that. When you say market, say makers or strategists got together and planned this, what concentrations have you seen in markets? Is it possible to focus on, let's say, a specific number of companies and make sure that the rest of the market moves based on, their coattails?
Of course. I mean, this is not a new strategy. I mean, we've done this in 1907. We've done this in 1987 with Buffett and Goldman. And, we're doing it now. It's just the way the strategy works is you take a couple equities, say a dozen of them, maybe a little bit less. Tesla would be one, NVIDIA, Adobe, all these companies that don't really have international peers to compare with and valuations that they can pump. And, the market takes over and comes up with all sorts of fantasy ideas of why Tesla is at a $400 billion valuation and so. But the fact of the matter is, if you look at the pricing and you look at all the call options that have happened over the last 4 months, it's pretty clear that this was completely done artificially.
Okay. So, and we've really seen, it seems, really U.S. markets lead global equities. So is there some linking of this? And again, are there international coattails that follow on to U.S. equity coattails, or is that what you've seen in recent months?
Well, that is absolutely correct. There are a couple markets that support the U.S. market. Specifically, would be the U.K. But the one I like to look at is the Swiss National Bank. They have their minions and their people intertwined within U.S. hedge funds and working with the Fed and the Treasury for years. So if something is going on, they would probably be the next people to hear about it. And you can actually see this by looking at their portfolio buys in Q1 and Q2 as opposed to 2019. You'll see that those certain equities like Apple and Tesla had just gotten ridiculous amount of buys.
Okay. Very interesting. And I guess how successful has that been? As we look at the depths of, say, the pullback, say in April, crude oil was at negative $37 in April, right? It fell $99 from January through April, what WTI did at least, right? Mm-hmm. Equities obviously, had a lot of problems. And so from your perspective, how has that been executed? How has it been pulled off? Is it okay? Is it good? Are we seeing, at least in equity markets, are we seeing a V? And do you think that translates into kind of the real economy, whatever that is?
Well, of course, I used the word perceived recovery before because, as this is artificial, it does support the markets. They've done exactly what the Fed mandate States is financial stability. I think Loretta Mester says that quite often in her speeches. So in that respect, yes, they absolutely stabilize the market. Now comes the challenge of rotating out into value stocks and actual financials or retail or something that'll actually create jobs later on.
Mm-hmm.
They're going to have to do that. But again, this is basically to stabilize not only the markets but also the political class that's supporting it.
Okay, so that's a good segue. So when you talk about the political class, we're in the middle of an election cycle. This is my first election to be back in the U.S. since, the first Bush election. I was overseas for a long time, so I'm seeing things I haven't had a front row seat to for a long, long time. So how does all the things we've been talking about with supporting markets and really having this kind of quasi-recovery, how does that segue into the election? How do you see the election playing out?
Well, the people that are in charge now are appointed by the political class in charge at the moment. So those two are going to protect themselves at all costs. Trump appointing Mnuchin doing what he has to do for financial stability. Now going forward, now we're looking at Trump, quote unquote, losing in the polls. Highly questionable once you look at the methodology about those polls. Right now, I would have Trump winning, about a 60% chance at the moment.
Okay. So, but the president isn't the only office, right? So do you have an opinion on the Senate and the House as well? Do you think we're going to see a flip in either of those places?
No, I think the Republicans will actually take back anywhere between 8 and 10 seats in the House, and they'll lose possibly 2, maybe 3 seats in the Senate. So they'll still control the Senate, although that's when political calculations come into work, where one senator or 2 senators can block an entire policy of the president,
sure.
Which means Trump is going to have to do more executive orders going forward, which I personally don't like, and nobody really should actually advocate for that. But this is the time that we live in.
Okay. And if your scenario plays out, how does that impact U.S. foreign policy for the next 4 years? What do you see as the major, I would say trade was a big issue in the first 4 years of Trump, right? And bringing China to the fore was one of the big issues, these sorts of things. What would you say would be the big foreign policy issues under a second Trump administration if it comes to pass?
Well, the big one is China. China at some point, China's quite intelligent. They hire former congressional members to go and talk politics with them, so they understand how it works. They're going to start hedging their bets. If they see that Trump is possibly going to win, phase 1 agriculture deals will be flying. They'll make some concessions on intellectual property rights and whatnot. So you'll see some of that happening from China. The Europeans they're absolutely in denial of what can actually happen if Trump gets elected.
Sure.
The only reason I see the euro at these levels is because they're on vacation and the U.S. has just negative news pounding us day in and day out, with the dollar dropping to the low 90s. But I don't see that. I don't see that sticking around. I think the dollar probably, as soon as Trump gets reelected, I think the dollar goes back up north of 97.
Yep, I think you're right. I think that's feasible. Well, Alberto, thank you so much for your time. I really appreciate this. Obviously, you have a lot going on and you have a lot of information. This is hugely valuable for us. So I'd like to check in maybe before the election, maybe after the election, so that we can do an assessment of, how would the changes, whether it's Biden or Trump, how does it impact markets and how does it impact geopolitics? That would be a fascinating discussion. So thanks for your time. I really appreciate it.
Thank you, Tony.